Alright, welcome back. Over the weekend, I did a post on mapping markets with gaps and taught how to identify it, how to mark it, and I want to do a few things in this video. Number one, we're going to take this to the next level. After we mark it, we're going to start to learn, make observations about how price interacts when it hits the gaps, when it hits these points, and we'll do a little bit more practice. So like for instance, we marked out something in the pound over the weekend, so we'll go back and we'll follow up the pound. The other thing I want to do is demonstrate a little bit about some of the things we do in our live sessions. And it's the same way we're operating here. We'll do a lesson, we'll talk about the lesson, we'll do gaps, we'll map a market with gaps, and we will follow what we do during the week. So what I'm going to show you is what we did on Monday with this euro, and then how it turned out, and what we learned from it, as well as the different trade options that were available. So just as a quick review, a gap, the definition, it's a wide range bar, bigger than the last three bars, with a space between the previous bar and the subsequent bar. If it's a gap down, we're going to mark the upper third. If it's a gap up, we'll mark the bottom third. There's a reason for this, right? Zoom, what got zoom? Contraction, expansion. These guys, this is where they threw them off the cliff. And so in the previous lesson, we started with this guy, right? Wide range bar, bigger. We saw how that one unfolded. We moved on, so on and so forth. So that was a lesson in how to mark them. Now, on Monday, during our live sessions, we do Monday, Wednesday, and Friday, we came in, learned our gap lesson, talked a little bit about them, and remember, a gap projects a mountain or valley. So as we came in on Monday, we marked out the gap that was available. So if we look, we have a wide range bar, right? Bigger than the last three bars, with a space between this bar and this bar. And just notice how this bar sticks out. It's not only bigger than the last three bars, it's the biggest bar for a long time, right? These are just simple observations. This is the biggest bar that's happened. So you got to keep going way back. Probably to here. All right. So right away, by picking these things out and making very simple observations, we see the two biggest bars on the board. And so we picked this guy out and we marked it according to our definitions. Wide range bar, bigger than the last three bars. We're going to mark out the upper third. Now we've done these lessons several times in the sessions. We cycle around, but we always go a little bit deeper into it and learn a little bit more each time. And this is basically where we left the session off. We noticed, right, now we're going to combine swings. We noticed that the market had hit the gap and was now swinging. And you can see the previous swing lessons for how to do that. Tuesday came around and it was a new low. Okay? And so that's how to mark a gap. Now we want to learn from this. We don't want to turn this into a system and it has a statistic and all that nonsense. If you go to some of the videos, the 3 types of trades in the try, this is what we're going to learn here now. You can go to the home page. There's a video on it. So basically there's 3 types of trades related to anything you use. Whether it's a gap, whether it's a line, doesn't matter. So the very first one, I'm not going to do a thorough lesson on this, you can go and look at the other videos, is type 1 push trade. And what that's saying is it's a bit of a momentum trade. Okay, it's saying this is a push trade related to the gap. We could relate it to swings if we want. So for instance, if swings were rolling about this big and I sold it here, I'm pushing it. I call it a push trade because it's like trying to follow this momentum, saying it's going to keep doing what it's doing. So in this lesson, we're going to look at the and it's very important when you apply this 3 types, what you relate it to. It's relative to the gap. It could be relative to swings. Okay. Now we learn. Boom. They tried to push it. So rather than just saying it should do this or it should do that, there are certain contexts which set up which trade would probably be most appropriate. But here, the gold in this is you have the ability to mark something out and then learn. Right? Price will teach us. This will be the try. I call it the try because price is trying to go down. If it's going to turn, this is the place to do it. So for instance, we're making lower lows, lower highs, low, and this is the, if it's going to turn, that's it. So I call that the try. These are different trade options along the process. Okay, we'll talk about process on the home page as well. And so the next trade option in this market is type 2 trade. And this applies to pretty much anything you want to apply it to. Just keep it consistent. Expand, then continue. So what this is saying is the market's not pushing anymore, right? If you've ever tried to push a market, you know the feeling of it, right? You're trying to push the momentum and it expands. See, the blue leg expands, stops you out, and then continues. That's called type 2 trade. Expand, then continue. And so the type 2 trade is up here. The more we can identify these things, the more options we have anywhere along the path. And so you can see related to swings where type 3 would be right here. That's a reverse, okay? So you can either push, expand, continue, or this turn can actually be a reversal. So what we're doing is framing markets. Remember, this is the lesson. We're learning to structure and map markets. Previous lesson was called mapping markets with gaps. The one before that, we learned to map markets with swings. We want to learn to take this chaos, find the biggest, baddest, ugliest thing in here as a reference point, and use it. There's supply-demand going on here. And so while we did this live on Monday, we got to watch it unfold. And people had the options to hit their trades in various places. But more important than the trades is the learning that you can take into the next 1,000 trades. Okay? We want to learn from this. And so you're getting a little taste of what I do in the sessions. I'm always saying we want to learn from this, not just mimic it, not just turn it into a dead thing. This is here to teach us. We approach it with curiosity, discovery. We learn what we can take into the next 10,000 trades or so. All right, the market never sets up exactly the same way twice. You can't step in the same river twice. Can't use a dead system, but we do need to personally learn. Only personal insight will do. So first we need to learn how to mark, and then we need to do some application. So that's a little taste of what we do in the sessions, and I babble about, and that's current. All right, so that's type 1, push. Type 2, expand, possible continue. This one didn't do it, right? This one actually reversed. Type 3, reverse, and I included the try. I'm not going to talk too much about it, but it's part of the whole thing. Now, let's take our next market. Let's take the market that we mapped out live at the time and see what we can learn. We mapped out the pound 20-minute live. We're on a euro 20-minute here. So let's see what we can learn from Sunday, how it unfolded. And once you have the ability to do this, you can do your own research. There are lots of trades that can be created along the way once you understand this. You don't have to work on my trades. Alright, so let's look at what we did in the pound. So this is where we left the pound in the last post over the weekend. We identified the gap, and just notice it's the biggest, baddest, ugliest thing. It's easy to identify. Wide range bar, it's bigger than the last 3 bars. With a space, right? See, it's a gap, just slid right through. And then we mark it like so. So let's see what happened. I'm combining this with the median line we were using. So let's see what happened. It bumped off of it. And get a feel, right? So now it's trying. Okay, it's trying. It's trying. You come over here. We test this and look at the size of the tail for you guys who use candles. You see what a candle looks like on this guy. Let's open that up a little bit. Right? You can see sellers scouted it. Said, this is price talking to you. This is part of our language too. It's the biggest, baddest, ugliest tail you've ever seen on this board. All right? This is price screaming at you. Hey, sellers are here. And price makes a new low. So this is how it unfolded. So we can see in this case it ate up some time, and it was a push trade. It pushed. It made a new low. As far as I'm concerned, if it makes a new low, the push succeeded. Then you get some more out of it. And then we came back in a violent way on Tuesday. So remember, we marked this live on over the weekend. Now we come back on Tuesday. And we'll take this right into today. So now you have a very valuable marker in this market. It's just facts, Jack. Sellers, 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 sellers. All this is a type 1 trade. Price comes up here. It's a type 2. Price comes back. It's possible type 3. And this is the possible try. So we'll come back and maybe view this market again in another post. So hopefully you enjoyed. It's simple markings, and if you just go practice, price will start to teach you, and you can create a lot of different trades based on marking something significant. It just takes a solid understanding.